Hey, Bulls and Bears, welcome back. Thank you for joining me here. We're back with another dose of economic reality. We have a lot of good information to get into today. We're going to talk about the housing market. Quite a bit of news coming out of the housing market, the housing bubble 2.0, as many people call it. Of course, the powers that be, the central bankers, the top 1%, they do not want the housing bubble to go bust because as the housing bubble goes, or as the housing market goes, the rest of the economy goes. And the U.S. real estate market is the biggest market in the entire world, even bigger than China. And China has 4 times the population as the U.S., so that shows you the enormity of the U.S. housing market. So, of course, they want to keep it propped up. And that's why we're seeing talks of rate cuts, right? One of the reasons. But rate cuts are on the horizon, in my opinion. And look at this news here. So, with inflation falling from the previous month, so barely, this is a 0.1% drop. But here's the headline, right? Many different outlets talking about this. CNBC helping the case for lower rates. Folks, a tiny 0.1% price decline from the prior month, and they want to use that as justification to cut rates. Folks, this is insane. This is insane. People are not going to even notice this slight drop month over month. We're still up year over year. People need a price cut. They need a price level drop. They need a cost of living drop. They don't need a decrease. And this is actually a decline. Now, many times I've said, well, this isn't a decline. It's just a slowdown of the increase. This is actually a decline compared to the previous months. So things got barely more affordable, but again, not anything that noticeable. What's worse is we had weekly jobless filings, 222,000, right? And that was less than the previous month, but 222,000. Just think about the 200 and something thousand jobs added for the entire month of June. But yet 1 week we have 222,000 jobless filings, right? So just think about that imbalance. If you took away government jobs, we would be having more people filing unemployment in 1 week than we have jobs gained in the entire month, right? Even if you don't factor that in, it's still really, really bad. Now, a lot of the people that get unemployed or get laid off, they go out and find other jobs. So it doesn't end up being as bad as you would think when you first see the unemployment number, the new jobless filings. For example, last week, 222,000, a decrease of 17,000 from the week before that. Now, the traders out there who mostly the top 10% that own most of stocks right now, they're out there begging for a rate cut. That way they can borrow more money, more cheap money, come in and buy stocks. Right? Even without that, they're still able to keep the markets propped up. We see all-time highs notched after all-time highs. We're finally starting to see some more movement though in metals here. Silver, $31.44 as I record this today. Gold up to 2,413. So it would be nice to see gold hold over 2,400 and silver to hold over 31. Right? Might see a few pullbacks there, but I think the trend is definitely higher. I think most of you know that. We've been talking about that for years. Oil just under $83. The 10-year bond dropped. Somebody's out there. Somebody with a lot of money is out there buying a lot of debt. 10-year bond now down to 4.2%. So that means mortgage rates won't be going much higher with that low of a 10-year yield. What else here? Prices fell in June for the first time since the start of the pandemic, and that was just that tiny month-over-month drop, which really nobody's going to notice. We've got more cases of tow truck drivers repossessing vehicles, and we've got a report here out of Wire News Facts. Tow truck drivers on edge as South Carolina repo man was, they took his life, basically. And we see another report here just a couple days before that. So these things are starting to tick up here. A series of incidents involving tow truck drivers have raised concerns within the industry about a potential increase in violence. Well, it's not a potential, it is an increase. One such incident occurred in Lexington near Columbia, South Carolina, where 46-year-old Stephen Hughes was fatally shot while repossessing a vehicle. Both suspects are in custody. Why would someone do that? Why would you put yourself in prison for the rest of your life by committing that, by doing that, instead of just letting your vehicle get repossessed? It's insane. Unless you feel like that's the end, but a lot of people do feel like it's the end, right? People are living paycheck to paycheck. Maybe they're having a bad day, a bad week. Something else happens, like a repossession to top off the bad week or bad month, maybe a bad year, maybe a bad life. But something eventually pushes these people over the edge, and more people are snapping. That's why we see lots of these types of things. These instances are on the rise. Now, a bit of good news. Some people say I never have good news. That's not true. Here's good news right here. Rents are dropping in Florida. Florida and Texas were the two states that saw the biggest influx of people in 2020. We have Florida now. Florida is bucking the national trend. For example, Jacksonville, rents are down over 12% year over year. That was the biggest drop of all the metro areas. In Texas, Tampa down 6% year over year. Orlando and Miami both down 4.8%. 4.8% rather for Orlando, 3.8% for Miami. So a little bit of relief, not much, a little bit. All right, let's transition a little bit. We have more layoffs here. 1,800 layoffs from Intuit. Intuit, the company that makes TurboTax. What else do they make? QuickBooks, MailChimp, and more. Is that a good sign, folks? 1,800. That is a good chunk. That's 10% of their entire workforce. 10%. Just another one of these big layoffs that we see. Now, let's jump over into housing. Here's how it was put out there in a recent article. Rate cuts won't fix housing affordability, economist says. Well, he's stating the obvious. Yeah, it won't. It'll actually make it worse. It'll actually make it worse, right? The lower the rates, the higher the asset prices go, because why? People can borrow more money. But take a look at something that I don't think anyone is talking about. Home ownership is lower now than what it was during the housing bubble bust in 2008, right? So a lot of people lost their homes, obviously, 2008, 9, 10, 11, 12. Who came in and bought most of the homes? Well, a lot of it was big companies, investors, um, groups within the top 10%. Take a look at the home ownership rate here, and we'll go out to a maximum chart here. All right, we saw, of course, in the early 2000s, it started climbing. More people bought homes, a lot of them with liar loans, adjustable rate mortgages, no income, or stated income loans, all those things, right? Interest only loans, believe it or not. Home ownership got up to almost 70%. Of course, we saw it plunge. And home ownership means people that actually own their home and live in their home, not a home owned by an investment company or a hedge fund like Blackstone, BlackRock, those things. We saw it drop down. Then it spiked back up in 2020 as there was basically a mad rush to buy a home and move out of the cities because the scary health crisis. Well, a lot of people, that was temporary. They put their homes on the market and they sold their homes. Of course, investors and people in the top 10% were a big chunk of the buyers. So home ownership dropped. And so now we're, as of the most recent report, that about 65.6% people own their homes. Right? So if we were in some sort of economic recovery like we were told, right, we were told that for 10 years since the financial crisis. Well, home ownership didn't recover. In fact, less people own their home today than they did going into the early 2000s, right? So this is part of the wealth transfer, part of the shift up to the top 10%, where you have 10% owning about 90% of stocks and about close to 40% of all real estate right now owned by investors and big money, right? So we know this likely going to get worse, but there is maybe a bit of good news. The housing market could be turning, not just in Florida and Texas, where prices are starting to come down. Nationwide, prices are still up near all-time highs when you compile all the different areas here. But look at inventory. Inventory kind of broke out of a level here, a price level here. So most recently, we've got about 840,000 homes on the market as of June, and that's the highest since about 4 years ago, since about July of 2020. So a 4-year high. Not a spike up and not a bursting of the housing bubble. Again, like I told you, the housing bubble likely won't go burst unless we see something huge bring down the banking system, which could be war, could be a lot of things, could be a cyber event, a cyber attack. Pick your poison. So be ready for that. But otherwise, You're not going to see much of a price correction or a crash. So you want to think about holding cash. I got the rhyming words mixed up. There's likely not going to be a crash unless we see a big black swan. So have your cash in a smart place, right? You know what I mean? So everybody, we're going to wrap this one up here. What do you think about today's update? The layoffs, the 0.1% drop in the CPI, and that being used as justification for headlines like this, helping the case for lower interest rates. Absolutely insane, but it doesn't stop getting more insane, does it? Everybody, thanks for watching. Make sure you subscribe. Please come back for more updates. We'll talk to you very soon. And I'd like to hear from you down in comments on this one today. Big love now. Peace.